All right. Let's talk about what's going on overseas right now very quickly. Some of the turmoil politically overseas in France really weighing on the international markets. Why do you think we're seeing an everything rally here in the U.S. while we're also having some of our own political turmoil?
Well, I think Europe is a little bit different than in US. They've got lack of productivity. We, lag against growth catalyst. There is a very fragmented market also, and as you can see, even like Spain has been upgraded its rating 2 weeks ago. You can see that France now is in trouble. So you have this divergence between the south of Europe and the middle and north of Europe, and it's more and more difficult for Europe than that it is for the US, obviously.
All right. Here in the U.S., a lot of talk about the markets being frothy. As an international investor, how do you view this market? There seems to be two camps. Some people that think that AI is such a strong tailwind, it's just going to continue to power the market, and we're at the beginning of a bull market that could last many more years. Other people think that we may be headed for some type of economic turmoil, and this market's priced to perfection. Which way do you see it?
I think effectively, AI, you cannot avoid AI. I think that's the theme, but it can also scare a little bit the market if we consider that only 5 stocks represent 20% of the market cap of equities globally. So it's look very strong, but it can still also very fragile underneath, if I may say. So you cannot avoid AI. We really believe that's the next theme, but we need to be, I think, a little bit careful of the concentration and the overcrowded around the theme.
All right. One other sign that people are looking at as frothiness, the rise in quantum computing stocks. How do you view that trade? The fact that investors are looking at something that I think a lot of people would view as relatively speculative. At the same time, we're seeing gold hit new all-time highs and Bitcoin hit all-time highs as safe havens. The fact that we have these two different approaches in the markets that are seeming to be very active at the same time.
Yeah, I think, gold, even if it's a big theme, it is at the bank since the beginning of the year. I don't know. I'm not sure that everyone is invested in gold for the moment. We have seen actually since last month, the retail investor, they used to play only the Max 7, and now we can see a shift. Not that they sell the Max 7, but they diversify their portfolio. We've seen a lot of volume on a gold and silver ETF. We've seen a lot of portfolio managers who are not at all invest on gold. So I think on top of central bank, I think on top of everything, we have all this flow on the market, and that's going to keep going. And same for Bitcoin.
All right. How do we also factor in seasonality during this time period? You point out that October has been known as a crash month. 3 very particular examples, 2008, 1987, and 1929. But at the same time, we have another guest coming up that points to Q4 on average since 1950. You see a gain of just about 5%. So how are you viewing the seasonality during this time period?
Yeah, I think it's just a myth that it's a jinx month because if you look at the percentage on average since 1950, as you said, the S&P is up 0.8%, Dow Jones 0.9%. So, but it is on seasonality the months the more volatile. And as we can see, this morning no one expects the France, start to push down 2%. So it's going to be a volatility month. Especially also there is the stop on a share buyback because the earnings season is going to start mid-October. So that's normally more a transition month until the end of the year. But yeah, for the miner, a lot of people is more like the bear month, which is not. So let's see what October is going to give us this year.